Hey, welcome everyone to Data-Driven Trading's Algo program. This program, we're giving you guys the data-driven trading algorithm so you guys can trade on your own and check out some of the plays that I take midday or in the afternoon using this indicator. So the whole point of designing this indicator was to be able to limit losses, protect myself on the downside, and help me follow some of the rules on the day-to-day basis. Psychology is a big thing in trading, and it becomes really difficult on some people when they're not able to take profit at the right time and they're not able to exit at the right time. This indicator especially helps you do all of that. And we're going to kind of go over all of this in detail in the next couple of slides. And of course, I'm going to show you guys some real-time examples on TradingView as well. So, how to use this properly as well. And remember, look, I've been using this indicator for about 7 years now, right? Why would I use this if this wasn't that good, right? I used to use this on Thinkorswim, and then I developed it for TradingView just so I could use it on TradingView because TradingView has a little bit of better charting and a little bit of better price action than Thinkorswim. This is one of the big reasons for my success in trading as well, because I always stuck with one strategy and I never bounced back and forth from 5 different strategies. In the beginning of my career, I actually did that a lot, and then I kind of developed this algo for myself so that I can kind of stick with this one strategy and always play this one strategy over and over again and know the ins and the outs. Before we get into any details with the data-driven trading indicator, we're going to talk about indicators as whole, right? Some of the do's and the don'ts, right? So let's talk about some of the do's for the indicators. The first thing always is always choose an indicator that fits your strategy. So if you want to be an option trader like the way I trade and you want to be a day trader and you want to trade on the day-to-day basis, then maybe you need to use an indicator that we have, right? And then of course, if you want to be a swing trader and you want to, trade off of supply and demand, then you need to have an indicator that fits your supply and demand needs. And maybe you don't want to use an indicator that is meant for 1 minute chart or a 5 minute chart, right? Maybe you want something that's built for the 4 hour chart or a weekly chart or a monthly chart. I'm saying all of this because I want you to understand that there's no one fits all indicator or a strategy. I promise you, I've been trading for 9 years. Maybe I'm wrong, but I know for a fact there's never a fit everything strategy. Let's kind of run through these, right? Of course, you want to back test. That's one of the biggest things. If you back test the strategy before you go live, better chances of you making money, better chances of you doing better, right? Consider market conditions. You don't want to be trading after 11 to about 12 to 1 because it's very choppy, right? Usually after 1, volume kind of starts to pick up a little bit. Usually around 2 to 3, that's when the volume picks back up in the market, and that's when you can trade. So you don't want to be using this indicator in the middle of when, the market has no volume. Some particular stocks do have volume around that time because they're breaking out and they're maybe breaking a supply zone or a demand zone. You can use it then, but you don't want to be using an indicator that's built for momentum in the middle of the day when everybody's on lunch, right? There's no volume. So always consider market condition. Keep it simple, right? Don't have 50 different indicators, 50 different strategies. It won't help you. It will just confuse you, right? Simple. Number 5, always use indicators as confirmation, not prediction. Do not try to predict the movement of the future with just using an indicator. If we were able to, predict perfectly every time, we all would be billionaires. And that's why you need to be able to just use the indicator as a confirmation. Over time, yes, you'll be able to predict the move much better using an indicator if you use the same indicator over time. But remember, right, you need to be able to use the indicator enough to be able to predict stuff, right? In the beginning, you always want to just use it as a second confirmation to what you're thinking or what somebody that knows a little bit better is looking at. Number 6, always trade with the trend. Never try to use the indicator to trade against a natural trend. If the market is trending to the upside, never try to trade against the trend. It will always hurt you 99% of the time. Trend always wins, so you have to trade with the trend all the time. Let's go over some of the don'ts in trading with an indicator. Number one, don't rely solely on an indicator. Remember, the indicator is only as good as you use it. With that being said, you need to be able to understand price action, fundamentals, and market sentiment before taking any plays or any trades using an indicator. Remember, we want to use the indicator as a confirmation to what we're looking at. If we think the market's going to continue going up, we want to take a long trade, then we want to take some targets using the indicator. We want to maybe put our stop below the 9 using the indicator. We want to put our stop when the indicator turns into a sell signal, right? So you need to be able to use the indicator as a helping tool rather than it doing all the work for you, right? So number two, don't use too many indicators. It will confuse you. Simple. If you have 5 different indicators telling you 5 different things, you're not going to know which one to rely on, and you're not going to know which one you should focus on, right? So having limited indicators is a very cool thing because you can actually focus on all the different ones, right? So for instance, if you have 3 limited indicators and you can focus on all 3 of them, and let's say 2 of them are telling you long and 1 of them is telling you sideways, more than likely the stock is going to go up. But if you have 5 different indicators and let's say 3 of them is telling you up and 2 of them are telling you down, it's going to be really difficult for you to decide. So remember, you want to be able to have limited indicators, limited way of confusing yourself. Number 3, do not ignore your risk management because, guys, this is one of the most important things to know when you're using an indicator. A lot of times, an indicator becomes 100% accurate and you make a lot of money from it. What happens is when the next time comes for you to accept that loss, sometimes as humans, we think or we believe that the indicator will come in for the rescue and change the movement of the stock when that is not true. And all you need to do is just follow your risk management and take that 30-40% loss, come back tomorrow and have a better trade, or come back in the afternoon and have a much, much better trade. So let's quickly run through this. Don't chase signals blindly. It will not help you, just like we talked about. If you just buy when the indicator tells you to buy, and you sell when the indicator tells you to sell, you won't really be able to know when the next time it gives you a false signal versus a good signal. So you need to kind of be able to use the indicator with your own analysis to help boost your analysis to being a 90% win rate versus it being only 60% win rate. So the indicator is only to be used to elevate your own personal analysis. And of course, don't assume that one setting works with all markets. We talked about this a little bit before, but remember, if you're using the indicator for swing trading, you need to make the settings a little bit different. You need to be able to use supply and demand versus momentum, or you need to be able to look on the bigger time frame to be able to take a trade versus taking a trade for the swings on a shorter time frame. Remember, you need to mess around with the settings and adjust the settings according to yourself. So last one, do not ignore market news and events. No indicator can predict this. No indicator will help you if you actually ignore any of these. If the indicator is giving you a buy signal, but there's news at 10, the indicator can switch to the downside very quickly and you won't even have a chance to enter or exit. So you need to understand when the market news is or when the market event is. And another thing I want you to understand is when you're trading SPY and QQQ, these things become super illiquid at times when market makers don't want to move the market. There's 1 out of 10 days when the market just goes sideways and they're not paying any person. So when this type of market conditions are going on, usually on news days, it's better for you to turn off the indicator and turn off, kind of your own analysis and just sit there and watch and learn for the next time. Maybe trade with the market makers versus taking trade on trade on trade. Because sometimes people think like, oh, my indicator was working so good for the past 5 days, but I don't know what happened on today. These events can make the market behave in a very shitty way, and then it's not in our hand to be able to make money. On those times, just chill out, relax, come back tomorrow stronger. All right, so let's get into some of the fun stuff now, and we're going to talk about how to use our data-driven trading algo, right? What's the best way of using this algo? So the best way to use this algo is, one, you always have to trade with the trend. I'm going to show you guys a picture right now, right? I'm going to pull it up right now. And you guys can see here, trend is always your friend. If you take a trade along with the trend, it's much easier for you to bounce off of this sport, continue the long trend versus playing the opposite side. Look, here we have a red trend starting. So the trend started to the downside. And let's say if you were to take a long trade in anywhere on this trend, you would have lost because look, the stock pulled to the downside, then it bounced back up, hit a resistance, and then continued selling to the downside because it was in a downtrend. And look, the next day, it started this very, very nice uptrend, and it just kept on pulling back to this one trend line that we started in pre-market, and it kept on bouncing off of that until it finally exploded the upside. And look, once it broke that 525 level, it shot to the upside and then it came back down, tested that level, and then continued moving to the upside. All right, let's finish up with these best ways of using the algo, and then we'll go into some live examples, and you guys will be able to see how this indicator works phenomenally, right? It works so good that you won't even believe. Don't use too many indicators like we talked about, right? Like, do not use other indicators with this indicator because you'll probably end up just confusing yourself. And of course, overloading your charts are just going to make it harder for you to see stuff. So you'll kind of see how we only have 3 or 4 different indicators, and they're all meant for each different types of trading, right? One is for trend colors, right? Second one is fibs to give you guys a good support and resistance levels, and then you also have supply and demand, right, indicator built in, as well as trend line indicators, and that's about it. There's only 4 different indicators that can give you all of these things that you should be looking at in the market in the same one indicator. And this is why our indicator is one of the best indicators out there, because it combines all the best ways of trading and it combines them into this one indicator. The third thing, use indicator as a risk management, because look, sometimes, right, you get a good signal to the upside and then the indicator shows you that, oh, the trend has changed to the downside. At that time, you want to get out and you want to re-enter if the indicator gives you a buy signal again, right? That's kind of the idea of playing the indicator, and you guys can kind of see that over time once you use the indicator, and you guys can build your own little risk management strategy with the indicator. This is why we're giving this indicator to you. This was only part of our exclusive private mentorship, and not everybody had access to this algo. But now you guys will be able to have access to this, and you guys will be able to use this and take some of the same trades that I take and see everything that I see every single day. Our signals are so good because of this algo. And of course, some of you guys might even use it better than me. So I'm excited to see how you guys are able to use this algo to improve your trading and how crazy of trades you guys take on the day-to-day basis. But look, timing is big. From 9:30 to 11, you want to use about 1-minute charts. The reason being, market has a lot of volatility, momentum, so you don't need to look at bigger time frames to be able to get really, really good trades. So you want to look at the smaller time frame so you get precise and the best entries. So after 11, a lot of the market goes to lunch, so the volume drops and the market becomes choppy and noisy. So to avoid all of that noise and the chop, what you want to do is, instead of watching the 1 minute for precise entries, you want to start watching the 5-minute, and then you still want to keep an eye on the 15-minute chart time frame to get the best trend idea. Whichever way the market is trending, you want to look at the smaller time frame to catch the best entry. And number 5, always take profit at major resistances. If you see a resistance on the 5-minute or the 15-minute chart, you always want to take a little bit of profit, even if it's 20, 30, 40 cents away, because remember, that resistance could mean that was the last time the stock was going to go up that high before it pulls back. you always want to build a cushion at the first resistance after you enter a trade. And we'll talk all about this in the live examples and give you guys kind of an idea of what I mean. Remember, any type of resistance that you see on a bigger time frame, 5, 15, 4-hour daily, always take some profit. Doesn't matter if you entered 20 cents ago, 50 cents ago, basically $1 ago, right? Or just understand that it might hit that resistance and pull back, and then have your stops ready to be able to exit if that resistance doesn't break. Keep that in mind as well. And then the last thing, pay attention to the gaps. DDT gap strategy works super well. I'm gonna make a video on this gap strategy alone, and it happens every single day where you see a 5-minute gap or a 1-minute gap or a 10-minute gap that always ends up filling in the morning. So the market always gives you a little bit of a clue on which way it's gonna move. So it always traps first and then it moves toward filling the gap. More likely, it always fills these smaller gaps that are left on a 5-minute chart or on a 10-minute chart or on a 15-minute chart. Let's go over some of the key features of our indicator, right? I'm going to show you guys a couple of things that we have on this indicator that help you along the way in your trading to help you become a much better trader. So one thing is we have these trend candles, as you can see, the yellow trend and the red trend. So yellow means bullish, the red mean bearish. Usually when the trend is yellow on a bigger time frame like 15-minute, 5-minute, it usually means any type of pullbacks will get bought up and the market will continue in the uptrend, or it will continue to the upside after pulling back. And also you want to pay attention to the 50 EMA and the VWAP. If the stock or the index is above the 50 in the VWAP, that usually means it's in an uptrend and you don't want to follow any down signals. Look, once we broke below the VWAP and the 50, QQQ went back up, tested the fib and the demand resistance, and fell all the way back down. This also doubles down why you should confirm if the signal is a sell or a buy. And this is one of the big reasons why this strategy works so good and so clean, because you get to see everything. You get to see the sports, you get to see the resistance, you get to see the fibs, you get to see the trend line, and you get to see the actual trend of the stock. Trading does not get any easier than this. This is why I built it. I built this so that I can see everything without having to look at 5 different indicators, having to sit there and drawing inaccurate support and resistance levels, not understanding how fibs work. All of this gets put together in one strategy where you can see everything. And I forgot to mention, one of the biggest part of our strategy is gaps. Look how cleanly it shows you if there is a gap on the daily, gap on the 5-minute, gap on the 1-minute, and a lot of these gaps fill. In my eyes, I've seen gaps fill about 80 to 90% of the times. So 8 out of 10 times, if you take a gap fill trade, you will make money as long as your timing is correct. So look, when you're trading options with our indicator, I want you to understand one thing, right? You should always pay attention to volatility, right? Look, if the stock is not moving up and down and it's just been chopping sideways for the whole day, more than likely it will continue doing that and you will not see a good result or a play even later on in the day. But if the stock is volatile or the option is volatile, something like this, the option came down from 105 all the way down to 62 cents, then it started bouncing back up. This is where you can go long and, grab these options around 80 cents, sell them around 120 or even 110 and have a nice little trade, right? Because there's 2 things going on here. One, the option is bouncing from the support zone, option is above the 9, and the option has the next resistance at about 110, meaning that if the option goes up to that next resistance, you can get in long above the 9 EMA in the proper trend and have a nice little long and make 30 to 40%. And of course, the option again gives you a pullback, gives you a buy signal again at 110, and then these continued all the way up to about 180s before they pulled back. And I want to say this one thing, and I hate saying this, but I will say it. Options are like a casino gambling. Usually, when you're on a hot streak or when the option is very volatile like this, it will continue being volatile and continue paying you. Because as traders, as day traders, we can only buy the option. Usually, when the option starts going sideways like this, it will always pull back. So, in any type of option day trading, it's always really bad when the option starts going sideways because there's a much more likely chance that the stock isn't able to break a resistance. But when an option behaves like this, where option gets sold into sport very quickly and then it just bounces up very quickly and it gets above the 9 EMA, it gives you the buy signal, then you know that it can continue being volatile and there's much better chances for you to go long here and making money versus trading an option which is just going sideways, because a lot of times sideways result in you losing money and the option dying or going down. Sideways on an option is equal to probably 60-70% of the time losing money. So remember, you want to catch the option when it's moving up and you want to get on the train really quickly and jump off when you're there. You don't want to be stuck at a station, because if you're stuck on a station like this, better chances are that you will lose versus make anything. So look, another cool thing in our trading indicator is a built-in 9 EMA. So this is a very, very important tool that I use. So remember, I'm going to say this one thing. The bigger the time frame, the better the 9 EMA will work. So look at the way it's holding this trend and moving up. Look at the way it's trending to the upside. So you can use this 9 EMA as a second bit of confirmation to knowing that the option is still trending to the upside, the option is still strong, and there's a chance, and is a very, very likely chance, that the option will explode to the upside versus it not moving at all, right? So take a look at this. Look at the way this option keeps sporting the 9. And remember, another thing, the more times the option or the stock sports the 9 EMA, the stronger the 9 EMA becomes. So look, because we sported the 9 EMA before multiple times, at 325, the option came down to the 9 EMA and bounced super strong, up almost 15% from 390 all the way up to 560s. And this kind of tells you how strong the 9 EMA is. 9 EMA is a very, very strong tool. It will help confirm your trend, help confirm the strongness of the buyers, and it will help you stay in the trades longer. So always keep an eye on this little blue line when you're using the indicator, because it will definitely help you trade much, much better. So another thing also I want to kind of go over is options and why you shouldn't get attached to the trades that you take. So look, to give you an idea here, look, there was a buy signal on these options around 60 cents. So let's say you got in around 60 cents on these exact options and you exited on the sell signal minutes when it came down to 55 cents or 50 cents. And then again, you bought the same options once they bounce off the support, which was a double bottom, and you bought these around 45 cents. And then look how much of a bigger move it gave you. So where you risked about 10 cents, and then on the next trade, you were able to make 60 cents. So 10 times what you basically lost on that one trade, right? So always remember this. When the options are this volatile, there's much more likely you will catch a huge move. So when the signal turns red or when the trend changes, it's in your benefit to exit and then re-enter when it presents another opportunity or a better trade. So this is one thing that I want you guys to get used to, And remember, this is just one random trade, right? If you lose 10 cents, 20 cents, 30 cents on this one trade, it really doesn't matter because the next trade could be much, much bigger and much better, right? Just take a look at this. This next trade afterward went from 45 cents all the way up to $1, giving you 60 cents. And let's say you didn't even take this 60-cent trade. There's a much better chance that you come in tomorrow, find a great signal, and make 60 cents to $1, and then only lose 10 to 15 cents on a bad signal or on a bad trade. You can always come back on the next trade, the next day, or the next week. Our goal is to be green by end of the month, not today. You can lose money today, you can lose money tomorrow, but if at the end of the month you are green as a trader, it is really, really, really good because all you're doing is sitting on a computer and clicking buttons to make somebody's yearly salary in a month. Always stop out, take the exit, come back on the next trade is always better. And another thing I want to share with you guys on this indicator, it's actually super, super good, is that we have these supply and demand zones. Look at the way this option double bottomed on this supply zone. Take a look at this. They came down, they bounced, and then they bounced again, basically double bottoming. If you're able to buy even one option like this a week, where you're able to buy this option at 40 cents and put in about $4,000, these options actually closed around $2. That means you could turn $4,000 into $20,000 if you're able to just make one good trade like this. The possibilities are unreal because look, today you could turn $400 into $2. The next time this pattern repeats, you can turn 4,000 into 20,000. And if a pattern repeats again, you can turn 40,000 into 200,000 in one day. So that's kind of the idea that we're kind of going behind, that once you use this indicator enough, you'll learn all of the patterns, you'll learn the strategy, and you can risk small amount of money and have a chance of the options going crazy and making 10x, 20x what you put in, right? So even if you are right only one time out of 10 days, you can make a lot of money.